Welcome to another S&P 500 analysis. Today is April 23rd, 2023. Last week, we saw Tesla drop more than 10% and it didn't bring down the S&P 500. Jobless claims started to inch up and the market took it as good news because it thinks the Fed will pivot with a slowing economy. Now, the bear is scratching their head and wonder what will it take to cause the S&P 500 to reverse. Would it be this week's earnings report from some of the notable FAANG stocks such as Microsoft, Google, Meta, and Amazon? In this video, we'll check the price action of the S&P 500 and the other major market indexes, the market sentiment, market internals, US dollar, the 10-year yield, oil, silver, and gold to see what they are telling us. Stay tuned. Now, looking at the last week's performance, the Dow Jones Transportation once again was the best performer. It had a gain of 1.17% for the week. And again, the NASDAQ 100 was the worst performer for the week, and it lost 0.6%. Now, for the month to date, the Dow Jones Industrial is actually leading the pack with the NASDAQ 100 at the bottom of the pack with a 1.37% loss, versus the Dow Jones Industrial with a 1.61% gain. Now, for the year to date, the NASDAQ 100 is still holding a 18.84% gain, while the Russell 2000 only holding a 1.72% gain. So you can see from the week to date and also the month to date, you kind of see market rotation from the tech stock into some of the defensive industrial stock. So keep an eye on that rotation. Looking at this weekly chart of the S&P 500, the first thing we notice is the weekly candle. It finished with an indecisive spinning top type of candle, and it is a very narrow range, so it's more like an NR7 type of candle, and the range was only a little bit over 55 points for the week, and it almost finished the week unchanged. It's only lost 4 points or 0.1%. It is continuing this one-time framing up. In other words, it is making weekly higher high and also still close above this 10-week and also this 40-week moving average. Now, a lot of people might be looking at this possibility of breaking above this 4,200 level and move up to maybe the next pivot high at these level here at the 4,400 and the 4,600. Later on in this video, I'm going to show you why this might not be the case. On this sentiment chart here, the VIX is below 17 level. It closed at 16.77 on Friday, but the put-call ratio is still inside of this 0.7 and 1 zone, and this is still what we call the hedge zone. The market participant sentiment is cautiously complacent, and they are not in a risk-on mode, but they are not worried about a market sell-off for the time being. The New York Stock Exchange up-down volume ratio summed it all up for the week. Not much happening except the subtlety is that big money is sneaking out. Look at the daily advanced decline. 4 out of the 5 trading sessions, there are more declining stock than advancing stock. And a slight advantage goes to the new 52-week high. The new 52-week high outnumbered the new 52-week low on Friday by 36. And we are continuing to see the negative divergence between the cumulative AD line and the S&P 500. You see these negative divergence here. We're still waiting for it to get resolved. If you find the contents in this video to be informative and useful, smash the thumbs up to help me promote this video on YouTube. And if you are new to this channel and like to continue to watch these videos for me, then click to subscribe to this channel. And be sure to turn on notification, otherwise you might not know if I have uploaded a new video. For the NASDAQ market, the up-down volume ratio was also mostly negative for the week. And also all except Monday, the daily advanced decline show us there are more declining stock than advancing stock for most of the week as well. And the new 52-week low continues to outnumber the new 52-week high, and the ratio is almost 3-to-1 in favor of the new low. And a huge negative divergence between the NASDAQ 100 and the cumulative advanced decline line. And this tells us the NASDAQ 100 has been pushed up without broad market participation. Now let's take a look at the US dollar. You see the US dollar got a nice bounce off of this 100.80 area. And right now it's sitting at 101.70-ish. So we're going to see would it be able to hold this area of support. And if it could, then we probably will see it come up to this 102.50 area and make its way up toward this 103.80. And if we take a look at the dollar index future here, you can see that it is sitting right inside of this high volume area and underneath the composite point of control. If it could get above this composite point of control, then look for it to come up to this 102.40 area, this low volume zone between this high volume area and the current high volume area that is sitting in. Now, if it breaks below this level here, this 101 level, then look for it to come back down to possibly test this low here, down here at this low volume area here. And looking at this 10-year yield, we see that the 10-year yield is kind of consolidating or just kind of bouncing around between this 3.52 and 3.6 area here. So probably in a couple of weeks when the next FOMC announcement of another 25 basis point hike, we probably could see the rate move up toward this 3.7 and 3.8. So that's what I'm watching for on the 10-year yield. And for crude oil, I'm continuing to look for a pullback and possibly come back down to the 73.70 area. You see that it kind of hit this resistance up here near this 83 area and start pulling back and fill this gap. So I anticipate to see it come down and test this area here between the 73 and 72 area for potential support and see if we get a bounce back up. Looking at silver here, we see silver got a little bit of a false breakout here on this trend line. And right now it's sitting right near this composite point of control near this 25 level. So I wouldn't be surprised to see silver pull back a little bit down to this 23.5 area, essentially come down to this edge here on this high volume area before it maybe make another push and get above this point of control here, this composite point of control, and possibly push up to this 26.75 area here. And looking at gold, gold also did a little bit of a false breakout from this high volume area and coming back. So if it pulls back to this 1960 level, then I'd be looking to see would it get a bounce back up and get back above this composite value area high. Because right now it could be coming down and set up a look above and fill. And if that's the case, then I'd be looking at a potential downside target. The initial downside target is be this composite point of control near 1870. Now it is if it come down and get a nice bounce at 1960 and pushes back above this value area high, then I'd be looking for a possible move back up. And the next time come up to tag this trend line here up near the 2120 area. Don't forget to visit my Substack page for additional content from me. I post my index ETF and the 11 SP 500 sector analysis and my analysis on the FAANG stock each week. In this week's FAANG stock analysis, you will see what the market is pricing in for those FAANG stock that are scheduled to report this week. And soon I will start posting some trade idea that I am monitoring. So go check out my contents on Substack after you finish watching this video. The link is smtraderca.substack.com. Subscribe to the newsletter. It's free. Now let's take a look at the indexes, starting with the S&P 500 on this daily chart. We see the S&P 500 broke out of this trend line and came up to this upper end of this composite value area. Then it pulled back and dipped below this trend line once again. Now next week, the upper range of the expected move is between somewhere around 41.97 to 41.90. So you can see it is kind of targeting that 4,200 level. And the downside, the lower range is between 40.76 and 40.50. So for the coming week, if the S&P 500 continue to pull back and come down and tag this lower range of the expected move, remember this little bull flag that I put up a couple of weeks ago? Then this will become invalidated and these levels will no longer be in play here, or at least these major move. So we'll be watching that to see, is it going to pull back to this area here? And from what I could see, it's pretty high probability that we'll get a pullback down into these levels. But hey, anything is possible. So if it pushes back up and tag this upper range of the expected move, then we could once again be looking at this major move here between 42, 48. And remember, we also have this little gap here that need to get filled. And then there's another gap here that is somewhere around 42.60 area here. So keep an eye on these level. If the S&P 500 decide to push up and take out the 4200 area and be able to stay above that level, then we be looking at these 4250, 4260 area. And for the NASDAQ 100, the upper range for this week expected move is between 13,320 and 13,268. And also the lower range is between 12,732 and 12,640. Now, if you notice that the NASDAQ 100 kind of try to fill this gap here, still a little bit short of filling this gap. And right now it's kind of just hovering around here, chopping around. But I do expect it to pull back in and possibly come down and tag this lower range of the expected move this coming week. And then eventually work itself down to this 12,400 area and test this trend line. And if it doesn't hold this trend line, I'm looking for it to come down to this 12,100 area, this high volume zone here. So that will be the expected scenario for the coming week on the pullback. Now, again, if it pushes up and we get some big surprise from those FAANG stock earnings, such as Microsoft, Google, Amazon, those guys, then we probably could see it push up to this 13,400 area, take out this upper range, and it might even come up and tag this high here eventually in the coming days or in the next week or two. So we'll see. I mean, anything is possible, but what I'm really looking for is some sort of a pullback this coming week. Now, I could be wrong, but that's my expectation. And for the Russell 2000, the Russell 2000 seemed to be putting a lower high here. Now, there's a gap here up at the 1817. So if it could come up and take out this high, basically put in a higher high and come up and fill this gap, then we'll probably be able to see it come up a little bit more on the upside. But if it's unable to get up to this high here, then I'd be looking for the price to pull back down to the 1743 area to try to fill this gap down here. And once this gap is filled, then I'd be looking for the Russell 2000 to come back down and retest this level here down at the 1697 area. And for the Dow Jones Transportation, we see why it was the best performer last week. You can see that it's been trending up and came up to this trend line. Now, it did encounter some resistance and pull back a bit. So we're going to continue to watch to see will it be able to break above this trend line and possibly move up to this 15,000 level next week. Or will it continue to retrace back down and possibly come down to this lower trend line near the 14,000 level? And for the Dow Jones Industrial, we also saw the Dow Jones Industrial kind of pull back from this trend line here, bumping a little bit of resistance. So unless it could come up and break this trend line, then I'd be watching the Dow Jones Industrial come down and try to fill this gap down here near this 33,000 area. And for the New York Stock Exchange Composite Index, I'd be watching for it to come down and possibly fill this gap and then see what the price action is when it get down to this gap level here. Would it be able to get a bounce back up and move up to this upper edge of this balance area? Or would it continue to come down? Then if it does, then I'd be looking for this gap to get filled and work itself down to this 15,000 level here near this zone here. In summary, the up-down volume ratio and the daily advance decline are telling us the smart money is sneaking out while they are using those few large-cap FAANG stock to give the illusion that the market is going up. The prolonged negative divergence between the cumulative AD line with the S&P 500 and with the NASDAQ 100 are setting up for a huge pullback when these negative divergences are getting resolved. Until the negative divergences are resolved, I wouldn't be chasing breakout from this current level. Instead, I will be watching for FOMO spike for reversal. Good luck and thank you for watching.